Now we turn our focus to the underperformance of Howard's money managers in recent years compared to their peers, and this is based on a special Bloomberg report. Howard's investment travails coincide with other challenges to the university's vast wealth. Take a look at this next report.
Harvard Management. The Harvard University's in-house hedge fund was built by Ron Daniel, a McKinsey and Company managing partner and Harvard's treasurer from 1989 to 2004. Daniel facilitated the remarkable expansion of the school's endowment. As chairman of the fund's board, HMC initiated a strategy of long-term investments in unconventional assets for endowments, including private equity and hedge funds, but after his death, HMC returns have dwindled in the last 2 decades. Harvard's endowment achieved an annualized return of 8.8%, placing it 7th among the 8 for-league institutions. Harvard has trailed behind 60% of university funds, above $5 billion in assets. This is based on a report by the National Association of College and University Business Officers. Howard's 10-year return was behind 80% of its peers. However, Harvard University has not crimped about paying its investing experts, according to tax documents filed by HMC. During the last 20 years, the endowment paid out by $800 million to its senior investment managers and executives. That money is sufficient to pay the cost of undergraduate financial assistance for over 3 years. In June 2023, Harvard University's endowment was $50.7 billion, the largest in higher education. However, this title might be short-lived, since the University of Texas system, fueled by oil wealth, could overtake it. Soon the traditional financial blunder of changing tactics at inappropriate pari chasing gains or buying high and selling cheap is a root cause of the Harvard endowment's underwhelming performance. 7 individuals have been appointed to oversee the endowment at Harvard since 2005. 2 of these directors lasted for less than 2 years, and were in positions prior to market declines. The school increased its exposure to risk, and just before markets rebounded and reduced it. HMC invested in once popular stocks that later went down in value. Not long ago, Harvard invested heavily in private equity before it started to underperform. Mark Williams, a lecturer in finance at Boston University who followed Harvard's endowment for years, said, "You just feel they're playing catch-a-ball." Howard Endowment spokesperson Patrick McKernan stated that HMC educational and research missions are sustained by the institution's singular focus on producing risk-adjusted return. McKernan said long-term investments naturally take time to be fully realized, but early indications show that the endowment is well positioned to meet both the current and future needs of Harvard University. The contrast with rival Yale University couldn't be starker, with an annualized return of 10.9% over the last 20 years. Yale was among the top 10% of big funds around the turn of this century. Yale had half as large as IND as Harvard. Now Harvard's endowment is barely 25% bigger on a per capita basis. Yale and Princeton University have larger endowments than Harvard due to their smaller student bodies. The university now faces many other challenges, including taxes on investment income and donor hesitation from Palestinian protests and anti-Semitism on campus. That is, in addition to HMC underperforming its peers. Business Bureau report We Own World is one. Thanks for watching this video.